All right, let's jump into it. Where are we at? It is 10:09 on the 18th of March, Wednesday morning. So, look, I'll start off with gold here. Look, at the moment, it's pretty much just sort of in a little consolidation. You can see there's a bit more probably on the lower time frames here, but realistically, we've got these sort of defined edges, which is just sort of like, so basically sitting sideways, testing both sides of it all. I did have a couple of little lines sort of drawn through here like this to make it a bit more of a channel that we could see, and obviously it came down tested here. This sort of horizontal seemed to sort of hold a little bit sort of stronger. Obviously we got that little bounce up into the end there, but what we are kind of sort of looking at pretty much is realistically, yes, consolidation. Consolidation favors, doesn't always guarantee, doesn't always translate, but does favour continuation. So in this sort of instance, we're sort of obviously sort of coming into it in a negative direction, and then we sort of drag that from the top over there, gives us a move down, probably around sort of 4,900, should we sort of break down underneath and sort of say a close underneath sort of 49.70 there. We do have this sort of price, well, I've got this price target down here around this sort of mid 4800s. This is basically, it was originally a little bit lower based off something like that, just with it being sort of like a bit of a bigger flag through there, but obviously had that little flare up to the top side over here, which I sort of covered last week, and then sort of obviously now we're starting to sort of come down here a little bit more. So look, anywhere down into these two areas here, I think sort of like we'll start to see some sort of pushback on it all. An interesting sort of thing with this though, yesterday, like the dollar's kind of been on its back foot, and most of the time, of course, we say, well, I say sort of 90 to 10, they'll sort of run inverse to each other. With the dollar being on its back foot through Monday, Tuesday of this week, for the most part, like there's a couple of little flare ups, gold hasn't responded at all. So you kind of would have expected with gold, with the dollar really reversing a lot of sort of say Friday's moves. That we look at where was gold? Gold was up around here on Friday. Excuse me. Gold was around here on Friday. So undoing some of its moves, you would have expected it to get a bit of a rally back up to around the sort of 5100 level. If we put these side by side, we could see sort of actually sort of how the sort of flows have whoops, not that one. This one over here. We can have a look at how the sort of flows have gone with the dollar. And as you can see, sort of like, you can see the lines match up here, but this is kind of where the dollar is at the moment. So the dollar's given back basically all of the gains. And then you can see that sort of obviously the gold just hasn't responded at all, which for any sort of recovery on gold would kind of make me a little bit sort of cautious. Um, Only just with the idea that I do still think that this sell down will have another bit of a flare. We got a little bit of a flare up yesterday, but I wouldn't say that's enough to sort of constitute that's the full effort of the dollar. Like I still think that, I mean, even though we did get a little bit of a rally and push back down here, I still think this is a bit of a back test area, and I do think that we do get a bit of a push with the dollar. Look, I'll get to the dollar in a moment, but the main thing I wanted to sort of point out, oh, what's it? Sorry. The main thing I wanted to point out with this is that you can see that obviously while the dollar's given back all the flows here, so you would expect this thing to sort of be like, okay, flows go from one market into the other, back and forth, this kind of sort of stuff with it all. It's not a perfect one-to-one. And as I said, look, 10% of the time they can run together. But they didn't even run together. It's sort of like they're not buying metals. Like, yeah, you got a 20, 30, 40 buck range or something. But realistically, giving back all that kind of move, the gold just has not responded at all. And if we have a quick look at sort of what silver's done over that same time as well, you can see sort of where was silver on the Friday. So at this point, silver's actually sort of doing even worse, isn't it? So where was silver? Silver's on the Friday. Oh no, it says that's okay. It's a little bit better, I suppose. Where we at? So around here. As you can see, the little red dots line up on the two charts. So back to sort of that. So basically, you would have wanted to see silver back testing around 84. But as you can see, the metals are just not responding to this sort of dollar sell off, which means the flows are obviously sort of going somewhere else. Okay, that's fine. Let's get back to gold. Um, but the point is that sort of if the dollar does have its rally and the flows aren't going into metals already, that it really puts it at danger of sort of moving to the downside here. And I think sort of obviously, a close underneath 49.75 is really going to be significant for that move there. Um, of course, the dollar could keep selling down, and I think eventually there will be a point if the dollar can't rally that they will just go, oh, okay, the dollar's fully not rallying here, and okay, that'll give it a bit of a spark. So a continued sell down in the dollar might start to spark up a move with gold. But when you sort of look at where gold is at through this rising support, back test to the underside, consolidating at the lows, which favors continuation, even as itself, it looks like it wants to sort of break a bit lower. It just needs something to push it over the edge. Of course, we've got FOMC tomorrow morning, so that may be the thing. So we may just be in for some more consolidation. However, should it sort of close down underneath 49.70, I would still be looking for 4900 to 48.50 to the downside here. All right, so moving on, sort of follow on with silver as well. As I mean, obviously I covered this a second ago, and we can see that it's just not responding to the dollar movements here. Structurally, this is actually moving very well. Like I covered this obviously over the weekend yesterday as well, and these kind of sort of moves where it does respect the levels very well is obviously a little bit more of a sort of methodical sort of move. Like it's not just pure got to get in, got to get out, whatever the cost, yada yada, this sort of thing with it all. Um, so what we are kind of seeing at the moment is it attempt to find that sort of double bottom. So again, if we look at this, if we get this stuff out of the way, and we look at this for where it's at in its little sort of three-leg structure, you can see it's attempting, so it's gone down, found support, up, found resistance, resistance, a previous support, it's in its third leg, it's attempting the double bottom here at the moment. Now, sort of a counter sort of argument to this sort of move, if this actually breaking and coming to the downside here, excuse me, is that we have FOMC tomorrow. And obviously sort of the dollar's going to be fairly susceptible against that because I think the question is more, I don't know, actually, let me just double check that. This one here. So where are we at? So it's looking pretty much a 1%. Where are we at? So the current rate is 3.75. So I hold very, very, very slight idea of a hike, but I think that's pretty much a non chance there. So the market's pretty much pricing for a hold here. And then if we get back onto the charts, we can say so it may sort of leave the dollar a little bit sort of susceptible, but at the moment, I mean, the dollar's been, or at least the Fed, and by extension the dollar, of course, have been more in the idea of a cut. So a hold in that respect is actually probably a little bit more of a hawkish move for them at this point. Anyway, the point is that when you've got these large bits of data coming up and that market can kind of go into a little bit of a standstill. So there is a possibility that we do start to find a range through here. Should this thing hold here, then we sort of obviously look back up around that sort of mid 81, 82 kind of level and then sort of see if that can hurt. Now, with the range, it doesn't sort of guarantee, okay, we've got a base, it doesn't guarantee we've got a continuation lower. It just puts it into, obviously, a little bit of a standstill kind of thing. It slightly does still favour continuation because range is consolidation. Consolidation favours continuation. So there is still a higher likelihood because, although they're not allowing it down, there's still sort of obviously sellers are still applying pressure here. So it just puts it into a bit of a question mark. So that is a possibility for today that we do get a little bit of a sort of range start to form. However, should we get that sort of close down underneath sort of like 78, then I would say that we are probably going to the low 70s. 73, 74, these kind of areas down over here. So it will be sort of as I said, it's pretty much predicated on the idea of what they do with the dollar. If the dollar does rally, I could see this pushing down here. However, any sort of moves down, and the same with gold as well, any moves down and sort of breaks to those sort of price targets down there, I think I'd be looking for some counter trade buys. Like I just don't think that this is necessarily just we're going to get a complete whitewash down here till we see the dollar confirm its higher time frame breakout backtest and then higher high. I think if and when that does happen, I do think metals are probably going to get a little bit of a deeper sort of correction. But should we get these moves to these lower sort of price targets that I'm looking for with metals, I'll probably be looking, obviously, book some profit and then sort of be looking to counter these things and probably get long for a bit of a bounce there. I mean, as you can see, most of the time these things have sold down pretty hard. There's been some pretty good counter trades here, even with little traps and that kind of stuff with it all. But, and they, you don't need to be first into the trade. So it's not like it hits there, okay, bang, I've got to buy at that point. We could come down here and consolidate and then sort of move back up. But the point is, I'd be looking to book some profits around these points if we get down to them, and then look to potentially counter. Because I think there's obviously some sort of buying effort trying to hold these things here. However, the fact that we aren't able to rally up, even with the dollar selling off, means I think they're going to want to push it down a little bit lower. Like, why would you not be buying it now while the dollar's selling off if you think it's going to 90 or above? Well, it's because you think, hey, you know what, it's going to come down lower. It doesn't mean that sort of like, it's completely game over for it, but I wouldn't be surprised if, you're getting the people that are buying these things at this point through here, particularly if this does go into a range, that there's going to be a bunch of stops down underneath here, which they're going to wash out before seeing some sort of rally. As to sort of how high, well, we'll take that as it comes, kind of thing. But for the time being, I do think the risk is definitely still to the downside here. All right, so tick along. We've got the dollar. Obviously, covered this a second ago. The dollar, just as I said, had a little bit of a push yesterday, but I just don't feel that that's like if you take everything in the whole sort of you know, the size of these moves and everything that is sort of the grand. Let me start that again. If you take this in the scope of the size of this whole move off the lows up here, all this kind of work. This little push up here doesn't really, to me anyway, sort of constitute a proper lower high effort. To me, this is more just like part of almost a bit of a channel sort of coming down like this, like a pullback channel sort of through here. Obviously, you only got 2 touches on that one there, but something to this sort of effect, meaning that sort of I still think that we have some top side, even if this thing is to sort of confirm. Let's just check this because we do have a zone through here. What was that zone from? The highs, tops, the highs over here. If we could hold here and get a bit of a rally, obviously sort of above, say, 100, 108, that swing high of this pullback channel here, that's when I'd be saying, okay, this is in proper third leg make or break. Probably even out of this channel, even though it's a fairly loose sort of channel, only 2 touches and kind of very questionable on the downside here. But anyway, above this level over here is where I think that we'll sort of be getting a proper third leg as to sort of lower high. Yeah, obviously if it fails before this sort of high over here, double top or higher high. But before we sort of actually sort of get an actual sustained, here we go, buy effort, moving up, I don't think that's enough to sort of count it. I just don't like, I mean, if you look at the size of this move here, and then it's almost just a within side kind of move here. So, I still think that the dollar has a little bit of a rally. I mean, this is on the 4 hour. It's oversold. It's obviously trying to find a little bit of support through here. One thing about the dollar is it loves deep corrections. Like, it's not afraid of sort of doing these monstrous moves. Well, monstrous moves, but, take that with a grain of salt. But as you can see, say this move here, a bit hard to see. Let's put on a different color up. This move here, looking great. What's it do? Comes back between the 61 and the 78% retracement. You know what I mean? It's not afraid of doing this one here. 61% from the lows, rallied up, 61% on it goes. So it's not afraid of doing sort of deep corrections, particularly when it's in this turnaround period. I think above these highs over here, that's our big time frame breakout, backtest, higher high. I don't think we're going to be getting such deep corrections. But while, we're still technically in this sort of like, are we breaking out, not breaking out, turnaround point, there's still a segment of the market that think this de-dollarization's the go, and this is just a little flare up and yada yada. So look, it's not guaranteed. Obviously, as I said, we've got FOMC tomorrow morning. Downside, I think if we do get down to sort of 99.30, that's a 61%. That's the time to make or break sort of rally around this sort of point over here. So should we get down to these levels, say cut it in the middle, 99.20. If you get down to 99.20, I think that's your kind of make or break. If you break below that, I think that's when we start to see, as I said before, the flows, regardless of what's happening, come back into the metals. So we've seen the metals not respond as it moves down to here. There's a good chance that they still continue to range, even if the dollar breaks a little bit lower. But around this point here, if we still can't get a rally from the dollar, I think that's when the flows start to go back into metals anyway. So we'll see how this one plays out. But certainly, I think above 100 and 114 is when I think we actually have a legitimate effort for that third leg. All right, so let's take a long. We got Aussie. Now, Aussie yesterday played very well at first. Sort of came right up, tapped into this little level here. You can see this on a lower time frame. It hit it perfectly, rejected straight back down. Had a second effort, but just managed to sort of just keep on grinding up and higher and higher and higher. So actually outperformed a lot more than I thought. I really thought this was going to be it for it and push back down. It held quite well. Of course, end of the day, they did raise rates, which does obviously sort of in a textbook fashion add strength to a currency. Um, the immediate reaction to it though was obviously sell down kind of thing. Unpacking this a little bit is sort of like it was a split decision. It was 5-4. As to sort of are they going to sort of hold or are they going to hike? Obviously, sort of 5 for the hike because it won out and they did hike. Um, the press conference was quite interesting. Obviously, the sort of typical things of sort of like, inflation's a thing that we need to control. Like all the data pointed to a hike. There was only a small little outside chance that maybe they would hold, just given based on the sort of, the Middle East situation. And that pretty much proved to be true, hence the sort of 5-4 split. So there was some actual discussion around that kind of stuff. One thing I did find interesting, that Bullock said yesterday was that she was like, "Oh, look, a- apart from the fact that, like, they have their one tool, which is the interest rates." She did sort of make note of the stronger dollar, Aussie dollar, helping inflation a little bit. Like, didn't specifically sort of say it, but like explicitly say it. But she did sort of say that, sort of like, obviously, sort of like if we have a stronger dollar, that'll sort of make purchases from overseas a little bit easier, cheaper for us because obviously we've got the stronger dollar with the exchange rate, which then would take some pressure off the local economy, which then inadvertently would lower demand on the local, which then, if you play this out, lowers inflation a little bit. So it's almost sort of like basically she was saying that they don't care if the dollar gets stronger. In fact, it would probably be something that they would welcome to have a stronger dollar because all they can do is kick up the rates. That's what they do. It causes people to borrow less. It causes them to supposedly to save a little bit more, reduces money and supply in sort of money supply around the system. So if they can sort of have a stronger dollar, and for that reason, then people sort of putting more emphasis in purchases from outside Australia, well, that means the local people aren't sort of getting those purchases, which means they can't keep driving the prices up and up and up and up. It was just a little sort of thing that I sort of noted with it all. Anyway, point is that the market was very questionable about it around this point here. But obviously, sort of with that continued dollar sell-off across the market, Aussie is the best contender for it. Aussie is the place that the market's like, yep, cool, that's it for us. Does start to have a pretty nice little support line moving up through here. So I think any sort of move back down underneath 70.85, we could start to see a little bit of a continued push down. However, little sort of triangle like this, as I said, consolidation favors continuation, does give you the idea that it may want to come a little bit higher. We have a little bit of a zone through here from back up near the highs. So I'd say sort of pretty much sort of if we want to see this thing sort of continue, that's above here, but that's the level down here. So let me just bang a little one of these zones in here as well. They're the kind of levels that I'm looking for Aussie for this sort of direction here. You could say, okay, yes, right, because this is quite a nice little support line. It's got quite a few touches very perfectly with these wicks as well. But you don't want to just sort of get through that because you do have this grey zone here at sort of 70, 90s. And as I said, 90s are always a great look at the sort of 90s react here again to sort of get the push back up where we come down to the 50 there. But the 90s are definitely an area that, doesn't matter what side of it you are, they're generally a good counter level to be trading. So you want to see that sort of cleared out. So I think sort of underneath 70.85 or above 71.20 for next direction for the Aussie. All right, and finally ticking on, this one here. So this is what well, I mean, I was kind of looking for a pullback before we got this this push through here, but as you can see, it didn't really. I mean, maybe that's its little pullback here, but way off the mark with this. I would have liked structurally, almost sort of like a little bit of a like a inverted head and shoulders. That's how I kind of saw this thing potentially sort of playing out. Obviously didn't get the pullback there, so nothing really actioned on this. And same with the Aussie dollar. You're just seeing this thing obviously just grind higher, but it did come right to that 61% when the data came out, and then bang, sold down, and then obviously sort of continued, sort of moved to the top side there. So let's drag. No, like that. That's a little rising support. I would be happy to sort of trade off. Potential for a little bit of a sort of flag setting up here. So let's get this out of the way here. Bang. Look, it's very, very hard to call on this one. Aussie is definitely on the sort of front foot. BOJ just aren't doing anything to save the end. We do have a lot of central banks meeting this week. Is the BOJ today? No, I think they're generally later in the week, aren't they? Yeah, they're tomorrow as well. It's going to be a very busy week in that because I think we've got BOE as well and ECB as well. Yeah, you got BOE tomorrow night. So tomorrow you've got Fed, Canada. So you got Canada, then you got Fed, then you got the BOJ, then you got BOE, and then ECB. Wow, that is a very busy little period there. Anyway, nothing really massive on this here at the moment. As I said, sort of, I think sort of basically this is the level you need to look for. If this thing is to cool, it would be underneath sort of 112.40, 112.50 down under this level here, which we were kind of looking at for that sort of breakout level yesterday. It's back above it. It's on the bid while it's above here. Any sort of push down here. This is the area that you need to see sellers regain to the downside of if this is to go lower. But for me at the moment, I don't like V shapes. It's too V shaped for me because it feels like playing hot potato. As I said, if we got that nice sort of inverted head and shoulders, it would give a bit more of an idea of structure. But this thing's just grinding higher, higher. I like a concerted effort from the sellers to push down, met with concerted effort from the buyers to push up. Here it's just sort of like, all right, boom, 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 let's just get into it, get into it, get into it. And I think it makes buying these things a little bit risky. So for me, nothing on this trade at the moment. And we've gone through the data as well. I think we've also got PPI or something coming. Yeah, where we at? Sort of Wednesday here. Um, Yeah, a bit of trade balance from Japan. Nothing is really too exciting. PPI coming in here, and a little bit of cooling. Actually, a little bit of cooling on this one here. So that's obviously, look, again, it's still this like stupid sort of delayed data. How long is this going to go for? Anyway, the point is that based off just this little bit of data here, which really takes a backseat to everything happening with the Middle East and obviously all these different central banks, but particularly with the Fed, that would be a little bit dollar weakish with this kind of thing here as well. And as you can see, yeah, pretty much Fed looking to hold. All right, that's it from me.